Welcome to the Global Updates, bringing you the latest news from around the world. The unthinkable. Walmart threatens to abandon America? The headline screamed in late 2018. They were bold. They were terrifying. Walmart considers U.S. exit. Could it be true? The world's largest retailer, an American icon, thinking of leaving its home market? This was not just business news. This felt like an economic earthquake. The ground beneath American retail seemed to tremble. Few could believe what they were reading. It sounded too extreme, too radical. The whispers grew into shouts. What would leaving even mean? Closing stores, shifting headquarters, pulling investments? The details were murky, but the message was clear. Walmart was in distress. The source of this profound corporate anxiety was clear. The year 2018 marked a sharp turn. A new chapter in global trade began. President Donald Trump was at the helm. He had a clear mantra: America first. This was not just a slogan. It became policy. A central target of this policy was China. Trump viewed China as an unfair player. He accused Beijing of intellectual property theft. He pointed to massive trade imbalances. He promised to fix it. His chosen weapon was tariffs. These were taxes on imported goods, specifically goods from China. Billions of dollars worth of products were targeted. Steel and aluminum came first. Then, a wider array of consumer goods: electronics, furniture, clothing, everyday items. The list grew longer. The percentages climbed higher. This was economic warfare by some accounts. The tariffs were like a stone dropped in a calm pond. The ripples spread far and wide. This was not just a US-China affair. The entire global trading system felt the jolt. Interconnectedness, once a strength, became a vulnerability. Supply chains, optimized for efficiency, suddenly faced new borders, new costs, new uncertainties. The world economy, a finely tuned engine, began to sputter. Retaliation was swift. China did not take the tariffs lying down. It imposed its own taxes on American goods. Soybeans, cars, airplanes. American farmers felt the pain immediately. Their largest export market for soybeans vanished overnight. Other countries, too, were caught in the crossfire. Canada, Mexico, the European Union. They all faced US tariffs on steel and aluminum. They too retaliated. Walmart found itself in an incredibly tight spot. It was the king of low prices. Its entire brand was built on affordability. This model relied heavily on global sourcing, particularly on goods manufactured in China. The tariffs struck at the very heart of Walmart's operations. Suddenly, a vast range of its merchandise became more expensive to import. This was a direct hit to its bottom line. The company faced a painful dilemma. Should it absorb the new tariff costs? This would mean thinner profit margins, potentially huge losses. Or should it pass the costs on to consumers? This would mean higher prices, betraying its core promise, risking losing customers to competitors. Neither option was attractive. Both carried significant risks. Walmart was walking a precarious tightrope. Walmart's executives began to speak out. They issued warnings. They stated publicly that tariffs would lead to higher prices. They lobbied the Trump administration. They argued against the tariffs. They explained the impact on American families. The lingering storm. Trade wins in 2025. Fast forward to today, May 2025. The tariff storm of 2018 has not entirely passed. Its effects still linger. Some tariffs were removed by subsequent administrations. Some were adjusted. Some remain stubbornly in place. The trade landscape is permanently altered. Businesses have adapted, but the scars and the lessons remain fresh. The world is more cautious now. US-China trade relations are still strained. The tariffs injected deep mistrust. They accelerated a trend towards decoupling, or perhaps more accurately, de-risking. Companies are actively diversifying their supply chains. They are wary of over-reliance on any single country, especially China. Vietnam, India, Mexico, and others have seen increased interest. This shift is complex. Presidential firestorm. Trump's outrage boils over. President Trump's reaction to corporate pushback was often fierce. When Walmart warned of price hikes, he did not take it well. He saw it as a challenge. perhaps even a betrayal. He had a particular vision. Companies should absorb tariff costs, or better yet, they should bring all production back to America, immediately. He did not appreciate public dissent from major US corporations. His responses were characteristically public and loud. Twitter was his megaphone. He would lash out at companies he perceived as unpatriotic. He accused them of gouging consumers or of not supporting his America First agenda. Walmart's counter moves, a masterclass in adaptation. Faced with unprecedented pressure, Walmart did not just complain, it acted. The company initiated a complex series of counter moves. This was a high-stakes chess game. First, it went to its suppliers. Many of them were based in China. Walmart pushed them hard. Absorb some of the tariff costs, it urged. Share the pain. Some suppliers agreed. Others could not, or would not. Negotiations were tough. Walmart also looked inward. It began to absorb some of the costs itself. This meant accepting lower profit margins on certain goods, a difficult choice for a publicly traded company. But it was seen as necessary to protect its price-sensitive customers, at least in the short term. They tried to shield shoppers from the full impact. This bought them time to adjust, time to reconfigure. Simultaneously, Walmart accelerated investments in technology, in logistics. Made in America, a patriot's dream, or a retailer's ploy? Amidst the tariff turmoil, an old promise resurfaced. Walmart had long talked about supporting American manufacturing. The Made in America initiative gained new prominence. It seemed like a perfect solution. If Chinese goods were too expensive, why not buy American? It was a patriotic message. It aligned with the political rhetoric of the day. It offered a glimmer of hope for domestic producers. However, the reality was incredibly challenging. Decades of deindustrialization had taken their toll. The US simply did not have the capacity, not to produce the sheer volume of goods Walmart needed, not at the prices Walmart's customers expected. American labor costs were higher. Regulatory environments were different. Rebuilding that manufacturing base would take massive investment and a very long time. The price of walls, consumers, businesses, and the plea for openness. Ultimately, who paid the price for the tariffs? Economists still debate the exact distribution, but evidence suggests a significant burden fell on American consumers. Prices for many imported goods rose, from washing machines to bicycles. This acted like a regressive tax. It hit lower-income households the hardest, those who rely on affordable goods to make ends meet. The very customers Walmart serves. American businesses also suffered, especially small and medium-sized enterprises. They lacked Walmart's bargaining power with suppliers. They lacked the resources to quickly find alternative sources. Many faced a terrible choice: absorb crippling costs or lose competitiveness. Some businesses downsized. Some delayed investments. Some, tragically, closed their doors for good. The tariffs created an uneven playing field. The lessons from this period, looking back from 2025, are stark. Trade wars are not easy to win. In fact, they often have no clear winners. They create widespread economic pain. They disrupt established relationships. They foster uncertainty, which is poison for business investment. The interconnected global economy means that actions in one country have far-reaching consequences. The tariffs set off a chain reaction that reverberated far beyond American borders. Countries interconnected through trade networks began to feel the strain. Factories in Asia saw order cancellations, leading to layoffs and economic slowdowns. European businesses, dependent on both American and Chinese markets, faced unprecedented uncertainty. Emerging markets, supplying raw materials, felt the pinch as demand plummeted. Even economies like Canada and Mexico, closely tied to the US, experienced disruptions. The ripple effect was undeniable. Global supply chains, once seamless, became tangled webs of uncertainty. Shipping delays became the new normal, and logistics costs soared. Companies scrambled for alternatives, but the immediate impact was clear. The world was paying the price for the trade war. In 2025, the lessons from those turbulent years are still fresh. Protectionism may promise local gains, but it often leads to global pain. The interconnected nature of today's economy means that no country is an island. Actions have consequences, and those consequences can ripple across the globe, affecting businesses, workers, and consumers everywhere. As we look to the future, the question remains, can the global community learn from these lessons, or are we doomed to repeat the same mistakes? Only time will tell. As the world grappled with the economic fallout, the political landscape was shifting dramatically. Governments worldwide began to reassess their trade policies and alliances. Pause twos. In the United States, the tariff war became a central issue in political debates, with leaders divided on the best path forward. Some advocated for a return to globalization, emphasizing the need for international cooperation. Others doubled down on protectionist policies, arguing that national security and economic independence should take precedence. Pause twos. In China, the government looked inward, focusing on bolstering domestic industries and reducing reliance on foreign technology. This shift sparked a new wave of innovation and self-sufficiency, but also heightened tensions with Western nations. Pause twos. Meanwhile, the European Union found itself caught in the middle, striving to maintain a delicate balance between its trade relationships with both the US and China. The political chessboard was more complex than ever, with each move carrying significant implications for the global economy. Pause twos. As we move further into 2025, the interplay between politics and economics continues to shape the world. The decisions made by leaders today will determine the trajectory of global trade for years to come. Pause twos. The stakes are high, and the world watches as this intricate game of political chess unfolds. As the dust settles from the tariff battles and political maneuvering, the future of retail stands at a crossroads. Pause twos. Retailers, especially giants like Walmart, must navigate this new terrain where tariffs could become the norm rather than the exception. Pause twos. The landscape is changing, with businesses having to rethink their supply chains, sourcing strategies, and even product offerings. Pause twos. The emphasis is now on resilience and adaptability. Pause twos. Technology and innovation will play a crucial role in this transformation. From advanced logistics and automation to localized manufacturing and artificial intelligence, the retail industry is poised for a revolution. Pause twos. Consumers, too, will feel the impact as price fluctuations and product availability continue to evolve. Pause twos. The question remains, can retailers balance the need for competitive pricing with the pressures of a tariffed world? Pause twos. As we look to the future, one thing is clear. The retail sector must be more agile and forward-thinking than ever before. Pause twos. The decisions made today will shape the shopping experience of tomorrow, and the world watches as retailers adapt to this brave new world.